What's up, people? It's your boy Clement here, and I'm here with my partner
Ebenezer. This is the continuation from the previous one. It was getting longer, so we had to continue here.
Right. So, factors affecting your credit score. In the part 1 video, we talked about payment history. We talked about
Derogatory marks.
Mm-hmm. And before we jump into this, just want you to know we are from EBC Finance. What we do is we coach people to build an excellent credit. And we coach you how to manage your money wisely, building budgets. If you want to buy a home, what's the process involved? If you want to buy a car, what's the process involved? We give you all the consultation you need and show you what you need to do so that you don't shoot yourself in the foot. I've seen people going for car loans for 20% interest.
What? That's insane.
That's why you need to run through our program and let's show you what the numbers actually do.
Yeah.
And so that you can make proper decisions. But we have a link below that you can use to book an appointment. Book that appointment for free consultation, and like and subscribe to the video as well. So let's get into it. The third one, also a very high impact one, is credit card usage.
Credit card usage, yes. It's one of my favorite because a lot of times people credit come to you, hey man, like I pay off everything, like everything is good. Like I pay my stuff off every month. Like I haven't missed the payments, nothing. Like everything seems good, but my credit don't seem to be going up. It may not be the only thing, but one of the factors that affected it most is the credit usage, right? Credit usage is like how much of your available limit that you are using. Okay, so it's like, let's say $1,000. My math is not good. Let me use that. That almost works for me. Okay, so ideally, the lower your usage of the credit card, the better your score, right?
Yeah.
And so they want you to use 30% or less. In general, that's how much they have done it. So they want you to use 30% or less of your available limit. So in this case, let's say we have a credit card that is $1,000. We have a $1,000 limit on this credit card, right? And so they want us to use 30% or less, which is $300 or less. So anything over $300 or less is going to be over 30%, and it's going to start affecting your credit. It's not as plain as that still. The reason I say that is the lowest you use, the best. Sometimes you may be using 20%, 20%, 20%, 10%, 10%, 10%. If all of a sudden you jump to use 30%, even though it's still what they say is the best, it may drop your score because you have exceeded the thing. It's normal. Credit is not always going to be the same. It's going to go up and come down. But then the most little credit you use, the better. In another video we have already done, which it may be posted before or after this, why you should get multiple credit cards, right? That's one of the reasons why I have so many credit cards, so that my utilization always stay low.
Yeah, because when you have multiple credit cards, they add all the limits together and they become one big limit.
Even though still every single card has to be below 30%. But yeah, that's the credit utilization. So you want to add something?
Yeah. So credit utilization, and my brother explained it very well, and it's point blank. Your limit. So know your limit. When you go to get a credit card, you have to know your limit. If your limit, they tell you that you have 10,000. I think I've heard you talk to one girl who got 10K credit limit and she was so excited.
Yeah.
Which is cool. But that doesn't mean you should go out there and swipe, that $10,000 worth of your limit. Maximum. Don't go over that 30% that he said. Yeah. For best results, stay under 10%.
Yeah, if you can, right?
If you can, stay under 10%. So 10% pretty much means that the example that you used, 10% means that if you have 1,000, you spend $100 or less on. If you feel like you're gonna spend a lot more than these amounts, your best bet is to have more credit cards.
Yes.
That way your limit will increase.
At least 2 or 3.
Yeah, your limit will increase so that if you spend more, let's use ourselves as an example. I have about 10 or 11 credit cards. My limit is around 100K. So that means that I can spend 10K and still be within that 10% range. But if you're watching and you only have one credit card, that gives you $2,000 limit. If you spend over $200, you're already over
Yeah,
the 10%.
already over the 10%. Yes.
Yeah, and with this one too, this is how the numbers look. The excellent is 0 to 9%, which is why I said as much as you can stay below that 10% of your limit. Good is 10 to 29. So that explanation you gave, if you spent within that 30, you're still good.
Yeah.
You know, fair is 30 to 49. So if you're spending 50% of your limit, you're around fair.
Yeah.
And poor, I like how Credit Karma normally say needs work. They don't want you to feel bad about yourself. So poor is 50 to 100%, which is saying if you have a credit limit of $10,000 and you go out there and blow $8,000 of it, or you have a credit card of $1,000 and you blow $800 off of it, you're gonna have a poor credit utilization.
Yes, you're gonna have a poor credit. That's a very big part. So most of the time, if your credit sucks, it may be that. Just that, like he said, we always praise disciplinary actions. Okay, so credit can make or break you. It's made us, right? It's made part of our success and stuff. But you always want to be disciplined first. Imagine having over 10K, 20K, 30K credit limit. Right? If you have that much and you are not disciplined, you're going to basically, because that money is not your money, it's the bank's money. So you are borrowing and you pay back. You borrow, you pay back. So you say, oh, one of my cars, I have literally over 22,000 limit, right? So that's not my money, it's for the bank, but then I can go swipe Gucci.
Boom.
10K. But who's paying? Me. I'm the one that's supposed to pay back, right? So the fact that you have higher limit, credit cards, the reason I get is for emergencies, right? So if it's an emergency and you have to really use it, you use it. Then you have to work your way up to pay for it, or to pay it off by maybe the minimum or whatever, getting more money, whatever, to pay it off eventually, because it's going to accrue interest if you don't. But always make sure that you are paying, and just don't use it because you have the limit. That's not kind of part of it. I just wanted to include that, be disciplined. But yeah, the usage is very important.
So one big question that I think it actually came up to me this week. So whilst we are discussing this, since it's credit card usage, what about for people who don't have credit cards? Because there are people who have credit, right? Maybe they've bought cars.
Yeah.
Maybe they have student loans.
Yeah.
You know, they've bought furniture, whatever.
Yeah.
But they don't have a credit card.
Yeah.
How does this affect them?
The utilization.
Wait, quick. Does it stay 100% because they don't have credit card, or does it stay 0% because?
Okay, so from my knowledge, credit cards are the ones that those utilizations work, right? So I said it in our very first video that we did, that you could have a good credit history or even better, but without credit card, you're still missing points. Okay, so if you have a loan, because I've had loans recently, I just got a loan for fun and I paid it off. So I have, I think, $500 remaining, right? The loans don't count towards your usage.
Right.
So if you have a loan of, like, I think I took a $6,000 loan, right? That loan doesn't count towards my credit usage. It does count towards my credit history, my everything about credit. If I pay, I get a ding. You made a good payment. Just yesterday they say, oh, great payment history. You have paid 95% of your loan with American Express. Okay, those are good for you. Then if you miss it, it's gonna go against you. So with a car note, a loan and stuff, it doesn't count towards your utilization. It just counts towards your good payment history and your overall credit. Okay, and so it's more like a charge card, which is going to be another different topic next time. Okay, but yeah, so in my knowledge and from my experiences, and because I've used all these models before, an actual loan, whether it's 10K or not, doesn't go against you. As long as you are paying it, it becomes a good part of your credit history.
All right.
Yeah.
So is that safe to say that if you want to build credit, you need a credit card?
Yes. Don't quote me wrong. I feel like we all need a credit card. Like we said, I've had people come to me that they don't have a credit card. Even recently, somebody came and then they didn't have a what is it called, a credit card, but they did have credit, like a car, like you said. If you remember, this girl, like, she did have a car, she paid it off, good credit history, nothing wrong with it. It's just that it's not going up, it's not coming down. She said in that case she needs a credit card to boost her score. Okay. I've had somebody too who I think had only a car note and stuff like that, and then she did come and it was already good, 7 something. It was pretty good. But then I was like, add a credit card to make it even stronger. Okay. So you can have a good credit without a credit card. But then if you want the best rates of everything and then the best offers of everything, you always want to add credit card to make it whole. Why not get it and just make it whole, right?
Yeah. So get a credit card even if you're not going to use it. Yeah. Right? Just get it every once in a while. Just buy gas with it or something.
Start with one if you don't have any.
And pay it off. Yeah. And then that way your credit card usage is going to be like 100%, 0%, which is really going to help your credit score.
Yeah.
Right. So another one, which is the medium impact. Medium impact is credit age.
Credit age. What is it?
How old is your credit? Point blank.
Yeah.
You know, how old is your credit? So I've seen people make a mistake where they get credit cards and along the way they cancel those credit cards.
I don't want a credit card again. Why should I still use it?
Yeah, they don't want it. They cancel it. You just shot yourself in the foot. It reduces your limit, and now your credit usage can be affected. Now your credit age is dropped.
How long you've had a credit is going to drop.
Yeah,
it's just like experience. Okay, if you're going for a job, especially here in America, they say we need, even entry level, they say we need at least 2 or 3 years of experience. Yeah. So it's like you actually go to work, build your experience to 10 years. But then on your resume, when you're applying for a job, you say you only have 1 year of experience because you have slashed away the 9 years. Then they are going to treat you like an entry level guy.
Right.
Yeah.
Good explanation.
Yeah.
That's I didn't think about it that way, but very good explanation. Yeah. So if you have 10 years of experience, you want to show that you have 10 years of experience. You want to keep it.
Yeah.
Yeah, that's true.
Yeah.
And it's the same thing with credit. The moment you cancel credit cards that you've used in the past, now there's no way to prove that you actually had these.
Yeah, because when they cancel it from your history. Yeah. That's why sometimes he's had it. We already talked in another video, so we don't want to say too much about it. But basically, he had a card. When he went to close, they asked him, "Are you sure you want to close the card?" Right? A lot of times they care a little bit. Obviously, they still want to keep you as a customer, but they will ask you, "Are you sure?" Because if they close it, that is going to be erased. It's going to show up as closed on a credit card, but it's not going to reflect on your thing. Yeah. So, and then the thing about credit age is, if you open a credit card, so I think my credit history is now actually the very first credit card I had is now 9 years now. That's how long I've been building my credit, about 9 years or something. And it's 9 years forever and ever. I mean, it keeps growing, right? But because I've gotten new credit cards, right? Every new credit card you have, the age decreases, but the overall age is still 9+ years.
Yeah,
but
so they find the average.
That's the word, the average. They find the average, so your age will be reduced. So if you see that on your credit score, it's nothing. Just we go to the other part of it, but it's nothing.
So it's 2 parts that affect the credit age. The longest one and the average of all of them.
Exactly, the average.
Yeah, so it's the same thing for me. The first credit card that I got, which is my oldest one, was 9 years ago. Yeah. But now my credit age shows 4 years.
Yeah, me about 3 or something.
It shows 4 years because I've gotten stuff along the way. So when they take my house that I bought, all the credit cards I've gotten along the way, the student loans that came along, all of it, they say that, okay, this one was 9 years ago, this one was 7 years ago, this one was 2 months ago, this one was 3 years ago. What is the average of all of it? Yeah. So normally your longest one could be 9 years, but let's say you had one 10 years ago. you didn't get anything at all, and then you get a new credit today, they're gonna say 10 plus the 0 years, which is the new one you got, divided by your 2 accounts, and now your credit age is 5 years, because that's the average of your 2 accounts. So that's how it works. But the longest one still helps you a lot. That controls
always
your credit.
keep it. There are situations where you may have to close your credit card, and if you really have to, so there are some cards that, especially my American Express card, recently they charged me for the $695 annual fee, and I was about to cry. But that card is being worth it, at least for now, especially now that I may be traveling soon. I will need the benefits from that card, so it's still worth it. But if you have a card like that, you are broke, or it's not like you are broke, but you are struggling, or whatever way, because that you're not able to pay a lot of your stuff, you have to pay $695 a year. It's not a month though, a year, and the credit is accruing interest. So many things are going wrong with that card if you leave it open. The longer you keep it opening, things are going to keep coming. In that way, you may end up having to close that card, and that's a good reason for you to close the card. But if these are not the reasons why you should close the card, it's just not sitting there, you're not losing no money or anything like that, do not ever close a credit card, because it's going to hurt you. If it's like you just opened your first credit card 5 months ago, you want to close it, maybe you still have to start over anyways, but it's not that much. But if you have a credit for like a year, 2 years, 3 years, it's like you have to start all over again. Okay, so yeah,
guys, so quick lessons. Biggest lesson: never close your credit card account. Or pretty much, because all the other accounts, once you pay it off, it closes by itself. But your credit card, because I've had friends do this. I've done it before.
Even recently, somebody had to contact us to ask, "May I pay off my credit card?
Should I close it?" Because they said that it's tempting. When the card is sitting there, it's tempting.
It is.
It is tempting. I was like, throw it under your bed somewhere, and once every 6 months, buy gas $50 with it, just to make sure that the bank don't close.
Guys, we are sitting here. We just showing our knowledge. We not 100% disciplined, bro. Recently, I bought something because I have a credit card. I bought it not because, even though I have the money to pay for it, I bought it because, man, shit.
Why not?
Why not? You know what I'm saying? I say, oh, in the next week, 2, or by the next month, I would have paid this off. So I bought it, right? You budget and you put it in. Sometimes you can do like hard. This budget's like tight, but you say, oh, I can put on the credit card and pay it off. So you do. But we are just saying that be disciplined and just don't use the credit card when you don't really have to. The more discipline you have, the more control you have over your budget and your money and stuff. So that is what,
Alright, guys, good lessons. This one we talked about the credit age and the credit card usage. Very important stuff. So if you haven't watched the part 1 yet, go watch it. That's where we talked about the payment history and the derogatory marks. So in the part 3 of this video, we're going to talk about the 2 remaining items that affect your credit score, which will be the total accounts you have, and then the inquiries, the hard inquiries, which is very important too.
All the factors are very important. The thing is, we were trying to cram into one, but great knowledge started coming out. So, and we don't want to make it too long, and you know what I'm saying, for you guys to be bored. So we want to cut it into 3. So now it's going to, the next one is going to be the last one.
The last part. So like we said, that's what we do. We help people build credit. We help people budget their money wisely. We help people make good financial decisions. Okay, so check the video for our link, book an appointment, get a free consultation. We charge you nothing. Get a free consultation. And if you need help building credit, if you need to fix your credit, we have a program where we put you through and we can help you do that. Even if you don't have credit, we can put you on we can put you on a good credit card to guide you in building your credit. Easy money, right? So
peace,
see
guys.
you in the next video.
See you in the next one.